I thought I knew XRP. For years, the story was always the same. It was this story of a polarizing digital asset, seemingly stuck in a never-ending cycle of hope and frustration. A story told through price charts that looked like a tired heartbeat, legal fights that dragged on for an eternity, and a faithful community just holding on, waiting for a promise to be kept. We've all been watching the same show, the daily price swings, the whispers of new partnerships, the constant debate over whether it's the future of finance or just a relic of a bygone crypto era. It's a drama that keeps everyone glued to the minute-by-minute noise. But while we were all staring at the ripples on the surface, a powerful, silent current was building in the deep. I was watching the charts just like everyone else. I was following the news, the speculation, all the chatter. Then, a late-night research session sent me down a rabbit hole. A single statistic, a buried quote in an institutional report, a technical document most people would just ignore, it knocked me sideways. It was a thread, and when I started pulling on it, the entire story we've been told about XRP began to unravel. What I found was a completely different narrative, one that has been deliberately unfolding behind the scenes, far from the eyes of the retail market. Everyone is obsessed with XRP's price and the ghosts of old lawsuits, but they're missing the real story. While you were watching the charts, institutions have been quietly making moves behind the scenes, betting on hidden features of XRP's technology that have nothing to do with a quick flip. In this video, I'm going to expose what's really happening. I will show you the evidence that the world's largest financial players aren't just interested in XRP. They are methodically building the plumbing for a new global financial system with the XRP Ledger at its core. This is the story no one is telling you. Let's start by clearing the air and talking about the things that have sucked up all the oxygen for years. First, the lawsuit. That long, dark shadow cast by the U.S. Securities and Exchange Commission finally receded. The final chapter truly closed on August 7th, 2025, when both Ripple and the SEC filed a joint stipulation to dismiss all appeals, cementing XRP's legal clarity in the United States. For years, this was the great barrier, the wall of uncertainty that kept serious institutional money in the U.S. on the sidelines, and the resolution was a massive victory, not just for Ripple, but for the entire crypto industry, giving XRP a level of regulatory clarity that few other digital assets have. The market expected an explosion, and for a second it got one. But then the narrative immediately shifted to the next big thing, a spot XRP exchange traded fund, or ETF. This is where the second layer of misdirection kicked in. The internet has been flooded with confusion about this. You've seen the headlines. Let's be crystal clear. As of late November 2025, a wave of firms like Franklin Templeton, Grayscale, and Bitwise have received approvals to list spot XRP ETFs, and several have launched. For instance, the Canary Capital and Bitwise XRP ETFs went live, followed by offerings from Franklin Templeton and Grayscale. On their first day, some of these ETFs saw total net inflows of over $164 million in a single session. But a lot of retail investors were left scratching their heads asking, why didn't the price instantly rocket to the moon? They saw these huge institutional products go live, and instead of a face-melting rally, the price action was choppy, even pulling back at times. That's because they were watching the wrong game. While retail thinks in terms of instant cause and effect, institutions play on a completely different timeline. An ETF launch isn't a starting gun for a sprint. It's the formal opening of a marathon. It's the construction of a regulated industrial-grade bridge for billions, potentially trillions of dollars to cross into an asset over months and years. The price volatility we've seen with XRP testing a range between roughly $2.90 and $3.65 isn't a sign of failure. It's a sign of a market in transition. It's the turbulence you get when a new massive force enters the water. While short-term holders might sell the news, on-chain data shows a more complex picture. For example, analyses leading into the ETF launches showed long and short-term holders taking profits, while the largest entities, the mega whales, were quietly accumulating, adding billions of dollars worth of XRP to their holdings. This is the classic misdirection. The public is told to watch the price, to get hyped for the ETF launch day, to react to the daily chatter. But the real story, the one institutions are betting on, has almost nothing to do with any of that. The lawsuit and the ETFs aren't the main event, they are just the prelude. They were the necessary steps to clear the runway for something much, much bigger. So if the price, the lawsuit fallout, and the ETF buzz are just the surface story, what's underneath? This is what I found that changed my entire perspective. The real story of XRP today isn't about its price, it's about its protocol. It's not a story about trading, it's a story about technology. While everyone was distracted by the market, I realized the world's most powerful financial institutions weren't just buying a token, they were adopting an infrastructure. And they're doing it because of 3 hidden features of the XRP Ledger that are perfectly suited to solve the multi-trillion-dollar problems of traditional finance. This is where we leave the common narrative behind. The journey from here is about what the smart money sees. It's about a fundamental shift in how value will move across the globe, and it requires us to stop thinking like a retail trader and start thinking like an institutional architect. The story isn't about when XRP will hit $5 or $10. The real story is about why it is being woven into the fabric of the future financial system. And it starts with a feature that most of the crypto world has completely overlooked because they're obsessed with a different and frankly more flawed technology. For the last decade, the crypto world has been obsessed with a single idea, the smart contract. Ethereum pioneered it, and 1,000 other blockchains have tried to copy it. The idea is simple. You write a piece of code, a contract, that automatically executes an agreement. It's powerful, but it's also a minefield. Smart contracts are the #1 source of risk in crypto. We see it every single week. Hacks, exploits, and bugs that drain hundreds of millions of dollars from protocols that were supposedly secure. Now imagine explaining that to the board of a multi-trillion-dollar bank. Yes, we want to put our entire balance sheet on this system, but there's a small chance a bug in the code could let an anonymous hacker drain it all in 3 minutes. Any questions? It's a non-starter. This is the problem that has kept real, regulated, institutional finance from truly jumping into blockchain. They can't tolerate that level of risk. They need guarantees, not gambles. And this is where the first secret of the XRP Ledger comes in. The XRPL doesn't primarily rely on complex, external smart contracts for its most critical functions. It has something far more powerful for institutions. Native tokenization. What does that mean? It means the ability to create, manage, and transfer any kind of asset is built directly into the core protocol of the ledger itself. Think of it like this. On a platform like Ethereum, issuing a tokenized asset is like hiring a team of third-party lawyers to draft a complex 100-page contract from scratch every single time. Every contract is unique, custom-made, and filled with potential loopholes that need to be audited for hundreds of thousands of dollars. On the XRP Ledger, it's like using a standardized, pre-approved legal template that's already part of the law of the land. Functions like creating a token, setting rules for who can hold it, freezing accounts, and even clawing back funds in case of fraud are native functions of the ledger. There's no complex external code to audit or exploit. These rules are enforced at the protocol level, the most fundamental layer, which gives a level of security and certainty that smart contracts just can't match. This isn't a small technical difference. For a bank, a hedge fund, or a government, this is everything. It means they can issue a digital version of a stock, a bond, or real estate, and embed the compliance rules directly into the asset itself. They can create a trust line to authorize specific counterparties, making sure they are only dealing with verified entities. They can manage these assets with total confidence that the rules are unbreakable because they are part of the ledger's core code, not a fragile application built on top of it. This is why you hear the XRPL described as being purpose-built for finance. It's not trying to be a world computer for a million different apps. It's designed from the ground up to be institutional-grade financial plumbing. While the rest of the crypto world is dealing with the fallout of the latest billion-dollar smart contract hack, Institutions are looking at the XRP Ledger and seeing something different: stability, security, and a direct path to regulated, scalable tokenization. This is the first piece of the puzzle that nobody's talking about. They're betting on the engine, not the paint job. The second huge problem holding back institutional crypto adoption is the Wild West perception. For decades, finance has been built on a foundation of regulation, identity verification, KYC, and anti-money laundering, AML laws. Crypto, for the most part, has been the opposite: a world of anonymous wallets and permissionless deals. You can't build a global financial system on anonymity. Institutions have to know who they are dealing with. This brings us to the second hidden power of the XRP Ledger: its built-in identity and compliance tools. Again, unlike other blockchains where these features are clunky, third-party services bolted on after the fact, the XRPL is designed to include them at the native level. Think of it like a passport system. On most blockchains, it's like traveling in a world with no borders and no ID. To prove who you are, you rely on a patchwork of external companies to vouch for you, and each has its own system. It's messy and insecure. The XRP Ledger, built for institutional use, handles this differently. It allows an issuer of a tokenized security to require that any wallet holding that security must first be verified. This creates a walled garden for regulated assets where every participant is known and compliant, all while using the speed and efficiency of a public blockchain. This isn't just theory, this is what's attracting the serious players. It positions the XRP Ledger not as a tool for avoiding regulation, but as a platform for enforcing it more efficiently. For a bank that needs to report every transaction to regulators, this is a game changer. It turns the blockchain from a compliance nightmare into a compliance dream, providing an auditable, unchangeable record that proves all rules were followed. This is the compliance moat. While other projects were chasing DeFi hype and cartoon NFTs, Ripple was talking to central banks and global regulators. They were building a system that speaks the language of finance, not just crypto. The pilot programs with central banks in places like Georgia, Bhutan, Palau, and Colombia aren't just for show. They are test beds for a new financial architecture, one where a neutral public ledger like the XRPL can act as a bridge between different government-backed digital currencies, each with its own rules. The XRP Ledger is being positioned as the Rosetta Stone for a future of regulated tokenized finance, the secure, compliant middle layer that can connect them all. Combined with the safety of native tokenization, this creates a 1-2 punch that makes the XRPL uniquely attractive to institutions. They get the security of protocol-level assets and the certainty of built-in compliance tools. This is a system built for the adults in the room. Are you starting to see the bigger picture? If a light bulb just went on and you're realizing this story is much deeper than you thought, do me a favor and hit that subscribe button. We're about to go even deeper because this tech foundation is what allows the real-world use cases that are quietly scaling up right now. Stick around because what's coming next is where the trillions of dollars come into play. Anyone who's been in crypto for more than 5 minutes has heard the original pitch for XRP. It's a bridge currency for cross-border payments. The old SWIFT system is painfully slow and expensive, like sending money by sea freight. Banks have to park billions of dollars in accounts all over the world, just sitting there doing nothing. It's called nostro vostro banking, and it ties up trillions in dead capital. Ripple's On-Demand Liquidity, or ODL, was the answer. Instead of parking money, a bank could use XRP to get liquidity in real time, sending a payment from dollars to Mexican pesos in seconds for a fraction of a cent. For years, that's been the story, and a lot of people think the story ends there. They're wrong. The ODL of today is not the ODL of a few years ago. It has quietly evolved into something much more sophisticated. And with Ripple's own US dollar-pegged stablecoin, RLUSD, now live and growing, ODL is transforming from a single bridge into a multi-lane superhighway. Here's the secret. It's no longer just about using XRP as a direct bridge. It's about creating a dynamic, decentralized liquidity network. A financial firm can now move from US dollars into the RLUSD stablecoin on the XRP Ledger Use the ledger's native decentralized exchange DEX to swap that for XRP, send the XRP across the world in 3 seconds, and then use the DEX on the other side to swap it for a different tokenized asset like a tokenized euro. Why does this matter? Because it massively expands the system's flexibility and efficiency. The automated market maker AMM functionality on the XRPL pours gasoline on this fire, allowing anyone to provide liquidity to trading pairs and earn fees, which deepens the pools of capital available for these instant swaps. This turns the ledger from a simple payment rail into a dynamic, self-sustaining liquidity marketplace. The XRP Ledger's built-in DEX is a critical piece of this puzzle many people miss. It has a unique feature called auto-bridging. If there isn't a direct market between, say, a tokenized Swiss franc and a tokenized Japanese yen, the DEX can automatically use XRP as the go-between to complete the trade. This positions XRP to become the default liquidity asset for the entire ecosystem, its usefulness growing with every new asset that is tokenized on the ledger. This is the next generation of financial plumbing. It's not just about replacing the old SWIFT system, it's about creating a new way for value to move that's open, competitive, and hyper-efficient. Ripple's strategic partnerships connect it to hundreds of financial institutions, and as the world moves to the ISO 2022 financial messaging standard by November 2025, a standard Ripple has been aligned with for years, it finds itself perfectly positioned at the center of this global upgrade. Now we get to the most sensitive topic for any XRP holder, the price. It's the source of so much frustration. With all this good news, the lawsuit over and ETFs launching, why isn't the price at $10, $50, $100? It's a fair question, but it comes from a retail mindset. The assumption is that good news should instantly equal a higher price. But what if I told you that for institutions, XRP's relatively stable or boring price has been a feature, not a bug? Here's the secret institutions get. You don't build the foundations of a new house during a hurricane. You build it in calm weather. For a large financial institution that wants to acquire a huge position in an asset and start integrating its technology, extreme volatility is a killer. It makes it impossible to plan, manage risk, or buy a multi-billion-dollar position without sending the market screaming against you. While retail investors have been panic selling dips and FOMO buying rips, a different game has been playing out. On-chain analysis has repeatedly shown periods of intense accumulation by the biggest wallets, the whales, often during times when the price is flat or declining. For example, in the months leading into late 2025, while smaller holders were selling, mega whale addresses reportedly accumulated over 1 billion XRP, worth billions of dollars. This is the institutional accumulation game. They don't chase green candles. They buy when there's blood in the streets. They buy when there's boredom. They use low volatility to build their positions methodically without causing a supply shock. The launch of spot ETFs is the next phase of this game. It creates a regulated, price-insensitive demand mechanism. The daily inflows into these ETFs, even if they're only in the tens or hundreds of millions, create a constant, steady bid in the market that can absorb the supply from legacy holders who have been waiting years to sell. This process turns old resistance into new institutional support. Think of it this way: retail traders are like speedboats, zipping in and out of the market, creating a lot of chop on the surface. Institutions are like aircraft carriers. They move slowly, deliberately, and with immense force. Their goal isn't to catch a quick wave. Their goal is to position themselves for a decades-long journey, and they needed a stable sea to load their cargo. The frustration with XRP's price comes from a misunderstanding of who the main players are now. They aren't here for a 10x in a month. They are here to capture a piece of a multi-trillion-dollar market over the next 10 years. And to do that, they needed to accumulate. The boring price was their cover. But now with spot ETFs live, that period of quiet accumulation is likely ending. The aircraft carriers are leaving the port. So far, we've talked about the secure tech, the compliance-ready framework, the evolving liquidity network, and the institutional accumulation game. But all of this serves one ultimate goal. This is the end game. It's a concept whispered about in the inner circles of finance for years, and it's finally happening. It's the tokenization of real-world assets, or RWAS. The problem with the world's biggest asset classes, real estate, stocks, bonds, private credit, is that they're incredibly illiquid. Selling a commercial building or a piece of a private equity fund can take months with mountains of paperwork and a fortune in fees. The total value of these illiquid assets is staggering, estimated in the hundreds of trillions of dollars. The solution is tokenization, converting ownership rights of these assets into a digital token on a blockchain. This could unlock massive liquidity, allow for fractional ownership, and create a global 24/7 market for everything. This isn't a small idea. Industry reports project the tokenized asset market could reach nearly $19 trillion by 2033, with some analysts even floating figures as high as $30 trillion. This is, without exaggeration, the biggest potential revolution in finance in a century. And which blockchain is perfectly positioned to capture a huge share of this market? The one purpose-built for finance, the one with native tokenization that avoids smart contract risk, the one with built-in compliance tools regulators can trust, the one with a decade-long track record of reliability and low fees, able to settle transactions in seconds, the XRP Ledger. This is the grand synthesis. This is why Ripple has been making its moves so deliberately. Its aggressive acquisitions in 2025, spending billions to acquire firms like prime brokerage Hidden Road and treasury management provider G-Treasury, were not random. They were strategic purchases to build a complete end-to-end institutional machine. With a prime brokerage arm, they have the credit and settlement engine for institutional trading. With a treasury provider, they gain access to a network that manages corporate finances for thousands of companies with a combined $12.5 trillion in annual transactions. These aren't just payment companies anymore. Ripple is building the universal bank for a new era. It's an ecosystem offering custody, credit, treasury management, and settlement, all anchored to the XRP Ledger. Imagine a real estate fund wants to tokenize its portfolio of buildings. It can use the XRPL to issue tokens representing shares, using native compliance tools to ensure only accredited investors can hold them. These tokens can then trade on the ledger's native DEX with XRP and the RLUSD stablecoin, providing liquidity for instant settlement. An institution wanting to use these tokens as collateral for a loan can do so through Ripple's institutional grade services. This isn't science fiction. This is the blueprint being executed right now. By late 2025, the RWA market on the XRP Ledger was already growing, with hundreds of millions in assets being tracked or held on-chain. This is the tsunami forming far out at sea. The price of XRP today is the weather on the shore. The wave that's coming is of a different magnitude entirely. The institutions aren't betting on the weather, they're betting on the tide. So far, we've talked about the secure tech, the compliance-ready framework, the evolving liquidity network, and the institutional accumulation game. But all of this serves one ultimate goal. This is the end game. It's a concept whispered about in the inner circles of finance for years, and it's finally happening. It's the tokenization of real-world assets, or RWAS. The problem with the world's biggest asset classes, real estate, stocks, bonds, private credit, is that they're incredibly illiquid. Selling a commercial building or a piece of a private equity fund can take months, with mountains of paperwork and a fortune in fees. The total value of these illiquid assets is staggering, estimated in the hundreds of trillions of dollars. The solution is tokenization, converting ownership rights of these assets into a digital token on a blockchain. This could unlock massive liquidity, allow for fractional ownership, and create a global 24/7 market for everything. This isn't a small idea. Industry reports project the tokenized asset market could reach nearly $19 trillion by 2033, with some analysts even floating figures as high as $30 trillion. This is, without exaggeration, the biggest potential revolution in finance in a century, and which blockchain is perfectly positioned to capture a huge share of this market, the one purpose-built for finance. the one with native tokenization that avoids smart contract risk, the one with built-in compliance tools regulators can trust, the one with a decade-long track record of reliability and low fees, able to settle transactions in seconds. The XRP Ledger. This is the grand synthesis. This is why Ripple has been making its moves so deliberately. Its aggressive acquisitions in 2025, spending billions to acquire firms like prime brokerage Hidden Road and treasury management provider G Treasury, were not random. They were strategic purchases to build a complete end-to-end institutional machine. With a prime brokerage arm, they have the credit and settlement engine for institutional trading. With a treasury provider, they gain access to a network that manages corporate finances for thousands of companies with a combined $12.5 trillion in annual transactions. These aren't just payment companies anymore. Ripple is building the universal bank for a new era. It's an ecosystem offering custody, credit, treasury management, and settlement, all anchored to the XRP Ledger. Imagine a real estate fund wants to tokenize its portfolio of buildings. It can use the XRPL to issue tokens representing shares using native compliance tools to ensure only accredited investors can hold them. These tokens can then trade on the ledger's native DEX, with XRP and the RLUSD stablecoin providing liquidity for instant settlement. An institution wanting to use these tokens as collateral for a loan can do so through Ripple's institutional grade services. This isn't science fiction. This is the blueprint being executed right now. By late 2025, the RWA market on the XRP Ledger was already growing, with hundreds of millions in assets being tracked or held on-chain. This is the tsunami forming far out at sea. The price of XRP today is the weather on the shore. The wave that's coming is of a different magnitude entirely. The institutions aren't betting on the weather, they're betting on the tide. If this deep dive opened your eyes to the real forces shaping the future of finance, make sure you're subscribed to the channel with notifications on. The surface level news is just noise. The real signal is in the deep trends we explore here. Thanks for watching, and I'll see you in the next video.